Welcome back. We take a closer look at the day's market action now with Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. The first thing that lit up when I opened Sense today, well, ShareNet, was that Telkom shares had surged 16%. And I tried to look for a Sense announcement. There was nothing until I saw news reports that talks of an MTN takeover of Telkom could be revived. What have you heard, and what are investors betting on right now?
So it's essentially a rumor about a rumored deal. A deal maker speaking to a journalist claiming that MTN has engaged one of these corporate financiers to perhaps consider engaging with Telkom. So, and hoping to get them to sit down and initiate negotiations towards the end of the year. This is literally all we have to go on. There's a little bit of history to this. In 2022, MTN really did make a go out of trying to acquire a beaten down Telkom at the time. There was a little bit of pushback from both sets of shareholder bases and of course the regulator around competition issues, specifically that at the time it would have built the largest cellular provider locally, bigger than Vodacom even, and it's even more so the case if that were to happen today. We know that MTN South Africa business is now struggling a little bit, and this is perhaps a way for them to try and revive it. And perhaps they've taken heart from the very slow but eventual approval by the competition authorities of the Vodacom deal, buying into Remgro's fiber business, at least an associate level holding, not a controlling holding. But those things are not really like for like, but perhaps that gives them hope that they could have a shot at this. But this is really a rumor, and even the rumor isn't that robust. But certainly the market has pushed Telkom up by 13% today.
Yeah. You know what? I wouldn't be surprised, because I think a couple of weeks ago I saw an interview that Ralph Mupita gave, and he was actually still continuing to talk about consolidation in the space. So yeah, we'll see what happens, and hopefully something can come out in the next few days, weeks, or months. Hopefully. Well, let's get on to the mining industry, Anglo American and Vaterra. Of course, after Vaterra got beaten down, I think it was on Monday, when the expiry of that lockup period of Anglo American letting go of its stake in Vaterra expired. And so they've done something about it and actually sold their stake. Can Anglo, I mean, obviously, it's quite clear that Anglo can move on. What does this mean for Vaterra? I actually did see that stock was down 3% today.
Oh, well, 3% is a fantastic performance. I mean, given the size of this placement, 20% of the total shares in issue, this is, I mean, the numbers are sort of, it's funny money. 44 billion rand being raised here, just pushed into the market like that, and that the discount to spot was actually quite small, and it barely dipped towards that level this morning in open trade. So ultimately, I mean, just from Anglo's perspective, it sounds like this is the sort of investor feedback they got. Like you guys have finally gotten this far in the simplification and focusing process, get it done. Move on, and at the same time, one could say it's somewhat opportune because the Vaterra share price has rallied enormously, and some would say that the simplification was costly, and they let go of an asset that really bloomed. Halfway through this process, but they still had 20% of this business to let go. So they've certainly had significant amounts of upside. From Vaterra's perspective, this is a good outcome. Obviously, it doesn't affect the company or its capital or its ability to say do business or raise capital directly. But the fact that they had this very strong institutional shareholder base, this placement went through without a hitch, without really suppressing the share price relative to what the other raises were doing today, and going through at such a a high valuation, it just demonstrates a lot of investor confidence and investor appetite for that share price. So it's a good outcome, nice outcome all around. And I guess it closes the book on this chapter.
What do you think about the outcome of Sanlam's financial performance in its half year? And actually, I did see that the share price dropped almost 3%, but I don't know if it's investors taking profit in a stock that has been well loved for a long time.
It's just flown a little bit close to the sun. The results aren't terrible, not by any stretch, but this has been one of the best performing financials on the exchange. That together with Capitec, I suppose. Really, really enormous run of performance. And this looks like a little bit of a disappointing set of results, but it is against an incredibly strong base. New business volume still pretty decent. Good performance out of investments, as one would expect. We saw that with momentum as well. When markets are robust, these companies give you a little bit of geared exposure to markets underlying. And I suppose, interestingly, India making a nice significant contribution, and they are doubling down on the Indian diversification project by exercising options to go just below 50% in that wealth business. The insurance business having been around for a long time there now, but pursuing a growing wealth and investment management business in India as well. So yes, profit taking, a little bit of disappointment, price for perfection, take your pick. But maybe a little bit disappointing, but off an incredibly good base performance in the prior period that we are comparing it to.
All right. Well, let's quickly get to your stock pick for today. Where are you finding value?
Sticking my neck out and going for a dog today, but Nedbank is my pick. Just pulled it up and saw PE of 5.8, dividend yield in excess of 10% for a quality South African bank. That is incredible, especially given the rating on the other banks, trading at around a 10% discount to book value. I mean, for Absa, that is typical. For Nedbank, that is very, very rare. So it just looks like it's demonstrating incredible value. You're somewhat, exposed to the corporate credit lending cycle, and that has been pulling back. And if there's an uptick there, Nedbank should get significant benefit from that. They have significant exposure there. They don't have the same African diversification of the other three, big three at least. And of course, that's a double-edged sword given potential currency devaluations and resources exposure and such. One could argue that this rating is somewhat unjustified, and we expect it to recover. And generally, we like the banks. So in the current environment, we think the consumer is turning the curve, and we're probably in for a little bit more consumer confidence, a little bit more lending activity going forward. And therefore, I like the cheapest player in that space. This looks like a pretty good entry point to me.
Too cheap to pass up. Thank you so much for your time and for your analysis on what has moved investors' money today, Cobus. That was Cobus Potgieter from Southern Cross Capital.